Welcome to the Oak Trader Report on the 16th of February 2014. All these stocks were put together yesterday and I'm recording it now, and it's just coming up to 6 o'clock in the evening Hong Kong time, 5 o'clock in the morning New York time on Monday. I just thought we'd cover a few stocks here. I'll just flick onto the slideshow. The retail jewellery sector, there was only one share that I could find in there that looked any good. The internet commerce sector, a couple in there, and the software sector as well. And this was the one share that I found in the jewellery sector. All the companies like Blue Nile and the other types of diamond distributors online, they either look to be in downtrends, or they look to what I call undecided markets, where I can't make up my mind either way. Whereas this stock, I did manage to catch the triangle on it, and I sold out here because of the distribution, but you can see some wild swings come into the market where my mouse is here, from 70 all the way up to 80. The pattern of the market is changing somewhat. Okay, the market had a big move up like that back here, but that was because of the large correction that the market had where my mouse is in 2011. Here, the market had that type of correction, but didn't have that type of correction, but still had that wild swing. And to me, this signifies perhaps the probabilities of distribution are not too far away. Where my selling point is, if I was to perhaps go short this market, if you look where my mouse is here, you draw a line up somewhere around the 65 to 70 level. Once we see a good bit of distribution here between perhaps 85 and 65, and we should see the market come down from here. But again, I wouldn't be short in this market until I see it break some significant trends. Also, it's had a very good percentage rise, up over nearly 700% in the last few years, and it's not a fantastic company. It's okay, but I can see this market coming off the boil pretty soon. But again, I wouldn't be short in this market until a little bit more, say 3 months more of distribution and a broken trend line, and that should be a good signal, and we potentially could see the market come back easily to around the 50 to 55 level over the next two and a bit years. Ticker MCOX, very tight parameters here, 50 cents on this chart. Very small amount of accumulation here, went from 250 to 750, couple of 100% move in the space of a couple of, I think it was 3 weeks or so, and big moves up here as well. It's a very volatile market, and if you look here, the same type of price action, it's more wilder here, and you had the spike up, but it didn't achieve the same type of spike levels as these do. I'm just wondering whether this is some type of trap. Investors have seen these couple of spikes over the years, thinking that this line here would lead to a big spike up, and it's come back off. But you see it on the monthly, and it does look pretty good on the monthly, but this kind of daily chart here doesn't look that spectacular at the moment, simply because of the spike ups, and let me just flick back to it, just simply because of the spike ups here, whereas here we saw it nice and quiet. I prefer seeing it a lot quieter before it spikes up. But again, when a market is gaining momentum, it does have increased volatility in the price ranges as it starts its uptrend, and if you draw a line along here, it almost is still in that uptrend. And if you look at the monthly chart here, it's quite a new issue as well. It's taken a battering, but you can see the downtrends being broken. But again, the stock started off at such a high level, 90, and it's come all the way back down. I mean, it just makes you wonder who issued the IPO, or who valued it, or was it perhaps a reverse merger. But the thing is here, the stock obviously wasn't worth $90 a share when it came out. I see so many like that, that one wonders why these people aren't investigated when they bring out these IPOs. But you can see a nice gradual downtrend being broken with that 200% move up that we saw before, and it is looking pretty good for the long term. It's only a $5 parameter here, but as I was saying on the daily, I would perhaps wait for a little bit more of a setup on the daily before I went long this market. It's definitely on the watch list and one that I'll consider looking at very soon. IACI, big uptrend move, up over 300%, and you can see here the market going from 55 all the way up to 75, what I call a parabolic spike, where the uptrend, if you look from here, the uptrend is steady, and then all of a sudden the uptrend goes parabolic. It's a good sign that distribution may begin at these levels. But again, if you draw a line along here up to here, you're looking at around the 65 to 60 level, and that's the area when it breaks that level. That's the area I would look at, perhaps to go short the market. And if you're long this particular market at the moment, IACI, then I would consider, once you'd seen some swings here for the next 2 or 3 months, perhaps selling out or a good percentage of your holdings, because the probabilities suggest that if you sold out in this range, that it would be roughly around the high area for this particular cycle. Netflix, NFLX, you can see here, these are $20 gaps on the weekly chart, and the daily chart, which is huge really. It's massive, and you can see here the stocks had a huge rise up, big gap ups here. These gaps on the short term scale usually are filled in at some point, so I would suspect over the next 6 months to a year that on the downside we're going to see this gap filled between the 380 and the 330 level. So on the downside it should come back down to around 320 during this particular cycle. And if you look at it on the monthly, you can see it's been a parabolic rise. It's up a few 100%, big wild swings from 320 to 380, from 320 up to 420, and then bursting up to 435. To me, this is showing all the signs of a bubble, and I wouldn't be surprised to see this market swing back down, as I said, to around the 330, 320 level, and to have some sort of distribution from here. Not to say that it's the end of the story of Netflix, but markets always go in cycles, and whenever you see a market go up like this, it's just sheer greed holding on to it, considering the percentage gains that it's had over the last year and say 3 months. This here would be a perfect example of accumulation, a consolidation level, distribution here where my mouse is, the beginning of a new cycle, the market consolidating where my mouse is in 2009, the uptrend beginning, the uptrend becoming more pronounced, and then the uptrend becoming what I call parabolic. And I think you can see, this one's had literally probably just 2 stages of an uptrend, very extreme and then parabolic. So I would be looking for this market to distribute very soon, and I wouldn't be holding on for too long. If you do have quite a large number of Netflix shares, I would look to distribute some at these levels and then wait for some more distribution, and then distribute some more. And as far as shorting the market goes, I think whenever this trend line here is broken at around the 380 level, this could be quite a good play down to 320 once it gains a bit of momentum. But one thing I've learned in the market, the harder the market goes up parabolic wise, the harder it comes down. It's just pretty much always been that way, and it's the same with the market. If it goes down hard, usually it goes up hard as well. Ticker symbol ABTL. You can see what a great flatline position this is, consolidation, going from 4 to 5, up to 6, up to 7, gaining more traction, and the consolidation's becoming less in terms of time. If you look how long the time was, say 2 months, just under a month, about a month, half a month, less than half a month, and then the market is going up, and you can see the uptrend is pretty gradual here, and then the uptrend changes to a more steeper uptrend, and then you can see that it's broken that uptrend, perhaps knocked out a few trend followers out of their long positions. I don't like this spike here from 14 to 18, but again, I do expect the uptrend to be broken at some point on a long-term upward move. So at the moment, I'm not too worried about that. I'm just going to hold on. But again, this type of move here from 14 to 18 does have me paying attention, just in case this market may distribute and sell off. But I think it's pretty good for the longer term, even though it's had a huge percentage rise. It's up over 300 odd percent already. That doesn't necessarily mean it can't go higher, just because of the uptrend here. But again, I'm just on the lookout because it was a broken uptrend here where my mouse is, and then it did move parabolically up as well. But again, that doesn't necessarily mean anything. But you can see here the steepness, and then it goes, and then you look here, and this is where you had the broken uptrend, and then you moved up, and that's what's got me thinking that this particular potentially is distribution. I mean, sometimes that's why I don't short the market when I see parabolic spikes. Like I mentioned in a previous Oak Trader broadcast, I shorted crude oil 3 days before the market collapsed, just below the 150 level. And those 3 days, even though the timing was pretty good and I made a lot of money off the trade, it nearly had me. And it was the same with the Swiss franc in 2011. I was only 6 or 7 hours off in terms of getting the exact point for the market to turn over where it did. But even then, those 6 or 7 hours with quite a large position, the market was spiking ridiculously in those last 5 or 6 hours of the Swiss franc upward move. So it's a very dangerous game to try and short markets when they parabolic spike like this, and I would just wait to see some more distribution action here, and perhaps to see if it breaks this trend here at around the 15, and then I would sell out my positions. So I've lightened the load a little bit, and I will look to lighten the load again if I see some more wild swings in this range here as well. There's no point being greedy. I'd much prefer to look for a stock that's making a great action like this stock did back in 2012, 2013. It was more of a high level consolidation here from the low of $2, and it consolidated around the $3.50, $4 level, and it was a beautiful move upwards. And this is it on the longer term monthly, and you can see the type of moves it's had in the past up to 80. It was a tremendously high stock back in the heyday of the internet bubble, and it's come right back down. But you've had some good downtrends being broken. Here where my mouse is, if you draw a line down, that's a great gradual downtrend being broken. It's been a long base action, and it's had a really good percentage gain. And it looks like from this chart that it could go much higher, but you have to remember this in terms of say the last 10 or 15 years. 3, 4, 500% move is pretty good. You don't necessarily have all the time the markets where my mouse is here in 2003 developing into huge uptrends like this. With these markets, you may get mini cycles for a long time, but again, I'm not selling out and waiting for some more distribution to take place, if indeed it does, and I'm in a good position if it does take off. Again, I haven't sold all my position in this market. TSYS, you can see here the long-term trend being broken from 10 all the way down, and then if you draw a line along here, this gradual trend down being broken by this spike up, and it is looking pretty good longer term for this market to move up to around the $4 to $5 level over the next year to year and a half, and I wouldn't be surprised to see it up there. But again, I would, with markets like this where it is in a slight gradual downtrend, I would wait until that's broken, definitely on the weekly and the monthly, before taking any big positions. And this is similar, this market here, Real Networks, RNWK. If you draw a line down, you get to here, but you really haven't had enough sideways movement here, enough decent price action, although it looks pretty good. If you draw a line from the top of here down, until it breaks that, I wouldn't be going long this market, because sometimes you do see consolidation levels here, like a distribution triangle, so to speak. And this area, they could have distributed more stock, albeit very gradually, because where this spike is, where my mouse is in 2010, is where you can distribute a lot. It just depends on how the company's been going along and what the feelings are of the people that have accumulated shares in this market and how they feel they can move it forward. But if you look at it on the longer term, the shorter term, you can see why I'm saying don't go long this market. Draw a line down until it breaks that move here. It's only a 10-cent parameter. Until it breaks that, don't even consider going long. ADAT, great looking monthly here. Draw a line down, broken, draw a line, and it looks like it's edging up. But again, it's another one where I'd wait for the daily to confirm, to see some decent price action accumulation on the daily and weekly. But this is definitely on the watch list and one for the long term. It could develop into a very good trade. Ticker MNDO. You can see here from the monthly, big downtrend being broken there, 1 up to $3.50. If you draw a line there, the downtrend has been broken here, and it looks to me that this market's going to move up to around the 3 to 350 level with ease. And if you look here with the downtrend, it's broken there, and it looks to be shaping up quite nicely here, this little action here. Right, King Gold Jewellery, I don't know why it's in the software sector. It's a wholesale jewellery business where they sell gold to Chinese jewellers, but I do believe they have an internet presence as well. KGJI, very tight parameters, 10 cents here, great consolidation action, moving up here, and it looks to be developing into another consolidation level. Wouldn't be surprised maybe to see it down around the 150 level and then break up from there. I'll show you it on the weekly. You can see the downtrends being broken. That's the the upward move I showed you on the daily, and then you can see the consolidation area here. And I believe this market's shaping up pretty nicely. You've had some decent amount of accumulation action here. There's some parts of China that have been beaten up really badly, and especially Chinese listed companies as well. So I would say this has quite a high probability of moving higher from here. But again, just waiting on the price action to move above this consolidation area here at around the $2 level before I take a look and take a serious position in this. Right, and here it is on the monthly. You can see it's developed big upward moves before, up to 11, very spiky, very speculative upward moves. Here we could be ready to experience something similar, but maybe something a little bit more longer in terms of the uptrend, and maybe not as violent as this one began, or this one as well. But I think this is a good one for the future, and it's definitely one you need to keep a beady eye on. CVT, quite a newly listed stock. I quite like the look of this one on the daily. If you look here, it's broken that trend, and if you draw a line along here at 36, pretty much here this consolidation area is kept above the 36 level, and it's looking pretty good here for a rise upwards. Ticker SPDC, downtrend line on the consolidation broken, and then you can see where my mouse is in 2012, it breaking it on the upside, and then it's following a nice steady upward pattern, and it hasn't really gone parabolic yet. But again, I would be a little bit careful of these lower price stocks. They sometimes can turn around pretty quick. Here it is on the monthly, and you can see the long-term downtrend that was broken in 2013, the beginning, and the uptrend that began. This could be a false move for the uptrend, but I think with the amount of accumulation, if you look back to 2000, 2002, 2003, I wouldn't be surprised that we see a move at least half of what they done before. So I could see this moving up to around the $6 to $8 level at some point over the next year to a year and a half. And just to show you there is money to be made from Chinese listed stocks in America. This was quite a new issue, got battered picking up the shares at around 4, the next step consolidation level, the next step, if you follow my mouse, the consolidation level, the next step, and then the upward trend beginning. And it started to go a little bit parabolic here, so the beady eyes are out, and I'm watching this for a break in the trend. So if you look here, draw a line up. Once we see some distribution here and a break in the trend, then I may well sell out of this stock. But it's looking pretty good. This is how you want an uptrend to begin. It begins very gradually, very unsteady, and then it begins to build traction and momentum as it goes up. But there's some very decent money to be made if you can find the right stocks. Okay, that's it for now. Sorry if it was a pretty brief broadcast. Hong Kong's been hit with a flu epidemic. Hopefully I haven't got bird flu and the battery's running out. But Kemp's been ill with flu and I have as well. So I'll be putting some more updates, feeling a bit better today, later on today or tomorrow. Okay, that's it for now. Over and out, and I'll speak to you soon. Bye for now.